videos.
The cash crisis. We're talking about Venezuela once again.
Systemic important banks. They removed the 1,000 tools that they were called monetary awareness. All right, we are live for a little late night RTD news update. And as always, looking forward to connecting, sharing my 2 cents on a variety of subject matter. And the markets were closed today, but then again, the debt continues to climb, and gold and precious metals in general continues to show the true nature of what's going on here. And it has everything to do with what some might consider to be a historical event unfolding. So I'm going to talk about that and a couple of other things. But as always, for those who are plugged in, definitely looking forward to sharing my 2 cents on this, as well as find out what you're keeping your eyes on. And of course, this week will always be interesting. There'll be more than enough things to talk about, but we're going to talk about gold and the possible opportunities that lie ahead in that space there. So welcome, my good people. I'll get into some headlines, some things that caught my attention, a lot of interesting charts and graphs and a technical analysis. And I tend to not really focus on that much just because it's more so for traders. But then again, you can't help but notice trends. And when the trends are continually going in one direction, I do believe that the trend can be your friend. So anyway, we're going to talk about that and a couple other things. So feel free, as always, to leave some thoughts, ideas, suggestions in the comment section, wherever you might be watching from. And of course, for those who might be new, you never know, make sure you hit the like button, subscribe, hit the check mark, the square, whatever it is you're watching, wherever you're watching, and show your support for the channel as well as your thoughts and ideas. So as always, we're going to look at a lot of graphs, a lot of information here, read through some narratives and try to make sense of what's going on, because ultimately everything I boil down to has everything to do with continuing to remind people, whether you're new to the channel or you've been here for quite some time now, the most important thing is to continue to get your weight up as a way of diversifying and protecting yourself from the mainstream noise that we always hear to distract our attention from other things. So that being the case, go jump into some things, share my 2 cents as well. Is this video, I'm really excited to do it because it's always an opportunity to present people with new opportunities. And of course, today's sponsor is Axecap Ventures. And so you'll get more information about that. Just something to look into for those who like to speculate and other opportunities beyond the actual physical metals themselves. And so I am someone who dips and dabbles in junior miners as well as a lot of the big players. And so just want to bring opportunities to you guys as they come across my desk as always. So more on that in a moment, but let's just jump right into it. As of right here, even though the markets were closed here in the US due to Memorial Day, I want to definitely give a shout out to all my veterans, those that have sacrificed on behalf of our country, regardless of the agendas that have been set before us. A lot of lives have been lost. And so definitely don't want to neglect that or downplay that, because a lot of people sacrificed so that we could be free as of now, somewhat. Anyway, but as of right now, I just refreshed my screen. And so it looks like we have some interesting continual upward trends. And of course, it has everything to do with gold. And so even though we're not near the all-time high, the fact that we're hovering in all-time high territory, that in of itself is historic. And I'm going to share another graph with you to really inspire this, because we have a historical weekly close when you look at the futures markets. And ultimately what I like to look at is if you invert that and you look at that same scenario from the other side of this equation, it ultimately means that we're looking at a historically low Federal Reserve note when measured against gold. So more on that in a moment. But we have gold right now, 33.43, and it will only go higher. Silver is what we're all waiting for to break out. Be patient, it will as well. Platinum is telling a different story, because I've been covering all the 4 base metals here, and platinum has gone above 1,000, because platinum and palladium always hover together, and some reason here platinum is broken out. So it's good to say palladium won't be too far behind. Just something from our people who like to speculate and to be diversified. But what am I getting at here? Also, I'm going to get to one thing that I did notice outside of a lot of interesting graphs. It would be remiss if I did not mention this particular page right here. On the screen here, as you can see, the last time I touched on this page last week, it was 36 trillion 800 I'm sorry, 36 trillion 800 billion and 90 something. But literally we have crossed over the 900 billion mark, and that is historic in nature. So we're growing closer to the 37 trillion mark. And the reason I bring that up is because the markets have been closed today. We were on a holiday season, but yet this clock did not stop, and neither can it stop until the truth is revealed. But once again, markets closed, debt don't stop, fiat debasement don't stop. It keeps moving forward, and gold is an indicator to tell us how and why that is. But anyway, yeah, I got a lot of stuff I want to touch on real quick, but before I move forward, let me just get into some of the headlines here. So some things here, and as always, for those who are checking in, plugging in, I make sure I put all the information here at rtd.news. Click the link in the description. You can go right to it. But I try to gather a lot of interesting graphs and charts and narratives that really paint a different picture outside of the mainstream narratives that were being sold. And also, for those checking in with me, definitely let me know your thoughts and ideas in the comment section. We'll definitely love to know your thoughts on this matter. But just some things here to catch my attention, man. I got to definitely share it. And yeah, but this is what I'm talking about right here. The very first one, as you can see, gold scores the highest weekly close in history. And I'm thinking, like, when I first saw that statement given from a chart that I'm about to show, that's when I came up with the idea that we're hearing a lot of information given about gold and in particular precious metals, but we're not talking about, or mainstream media, those that are trying to control this narrative, don't talk much about what that gold is priced in, and it is the Federal Reserve note. And this goes back to the whole concept of this channel of rethinking the dollar, like really understanding what's at play here and how it's this medium here that we use as an investment tool. But for our government, it has been weaponized against us to where they use this for their purposes, but yet we give our time, energy, sweat, and everything else for the same instrument here. And the dangers of it is becoming more apparent. And then on another note here, I took that statement, took the graph, and I just put it into the ChatGPT and asked it a question. And the response that it gave me was very surprising. I didn't expect to get the type of surprise I got, and I want to share that with you as well. And so anyway, let's get right into it. Let me get my screen together here. Okay, what am I talking about here? What are you talking about, Mike? This is sweet and simple. This graph here really paints a much different picture than anything we will see. You will not see this graph in this particular angle on any mainstream news source. So you got to go alternative media. What am I talking about? Let's get right into it. On the screen here, as you can see, this graph here, this chart, this was posted at the end of this week here. So literally when this past week ended, Bar Chart put this out with this statement. Gold scores the highest weekly close in history. And it's basing that statement upon this chart here, which is the June of this year futures market. And so if you look and you see what it indicates here is that literally there is no ceiling as to how, let me get this, there is no ceiling as to how high this can go, because as I always say, there is no floor to how low the fiat dollar can go. And so when I saw this, I'm thinking like, damn, this is a much different way of putting this entire experience that we're having when we base it upon how we value and calculate our financial worlds. And so this chart in of itself tells us a very different story. But then they say here the fact that it has been a historic weekly close. And this here goes out to June. So between now and June delivery date for these future contracts, they're saying that the price of gold has never been this high in its entire history. And then based upon this chart, we can also see that gold has never been 3,300 plus in history in general when measured in Federal Reserve notes. And so does that tell us that gold has appreciated in value substantially? Or is it telling us that what we use to measure gold in is being debased or being diluted that much faster? And then that takes us to this instrument here. And so as I like to do, I show you the chart based upon what I received from the COMEX futures delivery of date of next month, what they're anticipating, consecutive weeks of all-time highs in gold fiat terms. But for those who like to look at the other side of this same coin, so as always, I don't have an example here, but there's three sides to a coin. There's what you're being told, there's what you make out of the other. There's what you're being told, what the truth is, and what you make what you make out of both sides. That's the rim. That's the metaphor I like to use. But anyway, so what I did, or what I like to do, and you guys know if you follow me or whatever, I take charts and I invert them, turn them upside down, give them a different meaning, give them a whole different perspective. And with this same chart here, if I was to just use it, so this here goes out, let me see, this goes out to, let me get my graph here. This goes out here to September of 2022 is the bottom to the far left. And so taking that same chart back to where I love to go, which is to the Forex, and you look at, let's just look at this same information inverted. So instead of us measuring gold in fiat terms, measure gold as the medium against depreciating dollars. And this is what we get. So literally just taking 5 years. Gold measured against dying fiat, 48% of the potential purchasing power a person could have had they gotten out of or decided to dispose of probably a little bit more of these things here rather than holding these and having acquired physical gold. They would have saved themselves from losing 48.48% in just 5 years. And if the media presented information in this way, it will be a flat out race to get out of dying fiat. But of course, we won't get this from mainstream media. And so the weekly historical close also signifies a historically debasing of the Federal Reserve note as well as other fiat currencies that I'm going to get to in a minute. And so just for me personally, just explaining it that way further highlights how serious this matter is. And we're only almost 6 months into the new year, or a new year, and a little bit over 100 days of Donald Trump's second term. And if we're getting this type of response in such a short time, imagine how things will unfold in the next couple of weeks and months in his presidency due to all the distractions that he's thrown our way, tariffs, stablecoin news, Bitcoin reserve, all this stuff. Okay, but it doesn't stop there, because this chart here just gives you some surface level information on the importance of gold. But it doesn't stop. Let me give you some more. Let me go back here and get myself, go back. Okay, let me give it to you straight. So there's more. And so within my algorithm, more so because I follow a variety of subject matter, all relevant to the dollar, of course. I try as much as I can. And so I get all types of information. And the next one is from someone I actually interviewed. Gold is in a 45-year parabolic slingshot move. So that the nice lengthy word there just let you know that even though we're seeing great price action in gold being at an all-time high, or the Federal Reserve note being at an all-time low, we ain't seen nothing yet, because according to this slingshot move, we have a lot more room to go. And it can go higher without the need of any real bad news, because all the true indicators for where the big money players are running to for wealth preservation is becoming obvious. It's becoming obvious in the gold price, obviously. And so let me share this with you here. And it doesn't stop here. These are just things that I believe are worth paying attention to. So let me give you this one here. Let me bring it on the screen here. So this information here is from Grady, Commodities TA and Cycles, 29 years in the market, commodity sector investor, swing trader, all that good stuff like that. And so that's why I mentioned, he looks at the charts, chops them up according to what he sees, but he's putting money out there on this. So I take it that he wouldn't deliberately be playing himself to lose money. So he's doing things with the idea that he's betting to be right. And so here we have gold is in a 45-year parabolic slingshot move, moved 75% since I posted on the blue breakout. Hope you caught the whole move. Says when it looks right, it probably is. Target is 15,000 since years back. It might raise it further. It is happening now, not later. And so if you just look at his breakdown of this chart here, it can somewhat look intimidating, but I'll just thumb through it briefly. It says gold, 53-year chart, the 3 gold bull moves for the present monetary system. And so basically every peak is one of them bull phases he's referring to. First gold bull phase over here was with Nixon, when Nixon closed the gold window. So we see this first bull move here. We know what happened with that. The close the gold window shot up 1980. Okay, bam, we see where it peaked off at. Now the second phase that he's referring to here, it says in a resumed bull market, there is always a next resistance until there is not. And so here we got this next phase, which was from the years 2000 all the way where it peaked at 2011-ish. And of course, we know how it cooled off during the blue line over here. Breakout from the cup and handle is what he's referring to now. So literally in this area here where, I don't know, you can't see my mouse, but right in this area here is this breakout that he's referring to, where according to the way he overlaid all his metrics, this red line, this yellow line is where he said this is going. And just based upon the charts, at some point, somebody got to be right. And so what we're seeing here is some systemic type of opportunities for those that realize. And then, of course, you got a lot of people sharing their 2 cents on the side over my shoulder right here. So a lot of commentary there. But once again, no one would have imagined back in the second bull phase a gold being $3,000 plus. And for sure, back during the first phase when it was basically under 100 and shot up to 800, that we would actually see 3,000 plus. So with that being the case, at some point, it has to get there. So just something worth paying attention to, in my opinion. And so as a result of this, it makes me want to do more of the TA or follow more of the TA individuals, just because a lot of people who are early to these types of opportunities can profit majorly beyond the actual physical. But it doesn't stop there. But it doesn't stop there, my good friends. And so let me just share this with you here. Another interesting chart that just plays into the thesis as to why it's better to measure value as well as wealth preservation in things other than dying fiat. It says dollar has devalued 98.9% versus gold since 1971. And this is just one of many other charts that just paints another picture as to why we're seeing the type of action we're seeing in gold. Because confidence in gold is growing at a very fast rate. But the mainstream media won't tell you that, unfortunately. So what am I talking about? Let's go right to it. On the screen here, let me put it on the screen here. So this is from Global Market Investors. This came out last week at 1:30. But just the idea of the currencies. This graph here is the inverted chart that I showed you of what has happened to the dollar when measured against gold over the last 5 years. But here we got something that shows more currencies. So wherever you're at in the world, whatever currency you're using, this is what's at stake. It says US dollar has devalued by a whopping 98.9% versus gold since then. The British pound has lost 99.4, while the euro would have lost 98.8 if it existed since then, referring to 1971. It says fiat currencies are in a constant free fall. So that is literally what we're up against. Regardless of what your favorite politician says, who's your favorite president, who you voted for, it doesn't matter. They come, they go every 4 years or so, but yet our fiat currency continues to fall fast, and it's falling faster. This is why investing, and just think about this word here, investing. We call the type of financial ordeals or dealings that we do on a day-to-day basis, or when we, I guess, give our funds over to individuals to take care of us, take care on our behalf, we were told that is investing. But is it actually investing if you're on the losing end of the trade in reference to how value is measured? And if it's measured in something that's in free fall, who's really winning? So getting more in nominal terms of the very same thing that is in free fall, is that really investing? that is something that we're going to be confronted with. And I personally have already determined what is more ideal. That's why my motto is get your weight up. Because I think, and I was even talking to my son about just understanding metrics and weight, and even changing how he sees things and referring to it in weight terms, not actually in nominal price terms. It was a good way for a young man to be able to distinguish between what he's being told rather than what was. And so here on the chart, give it to you straight here, things that are just of interest. So here we have, going back to 1971, we have various currencies in gold from 1971 and up to April of 2025. So as you can see over my shoulders here, we have Swiss franc, Japanese yen, the euro, the dollar. The pound is at its lowest of all times, and the pound used to be the world reserve currency prior to the dollar. And so we got the pound, the dollar, and the euro, the yen, and the Swiss franc. So out of all 5 of these currencies, the Swiss franc is the strongest for no obvious reason, for an obvious reason other than what it is here. Smaller currency base and total circulation, and in Swiss they actually value gold in a much different way than we do, and their currency was still quasi pegged to gold up until the last couple decades before the Nixon move. So the fact that this chart here shows you what we're experiencing as of now, and for the most part, we're still in a calm world. We're still in a calm environment where everything is hunky-dory and there are no real issues. So that's that. But I highlighted the word investing because the word investing is something that I took the word investing and I actually took. Let me see. Let me give it to you. The very first graph that I showed you of the historical weekly close, I took the graph, I took that statement, that one sentence statement along with that chart, and I put it in the ChatGPT, and the response it gave me is the next thing that I'm going to touch on. And it basically said, give me 4 key takeaways that every investor should seriously consider. And the response, dang, like that's upfront and honest. So once again, most people may not even consider the question or even ask the question to a large language model. Nevertheless, actually heed the advice that it gives. But before I move forward, this is the time now. I want to just give a shout out real quick. Give a shout out to the sponsor of this video here, just because this comes with the opportunity in of itself where people can then, beyond the physical, if you are interested in speculating, this is where you can take advantage of other opportunities. And so as you can see here, Axecap, zoom in right here, Axecap is an investment firm that is looking to actually acquire gold projects. And so if I get it on the screen here, so as you can see here, and today they had some interesting news release here if you guys are interested in finding out more, but this is more information I want to give you guys real quick. So take a listen to this, then I'll give you those 4 questions. Today's video is brought to you by Axecap Ventures. Gold has been in a strong long-term upward trend since 2001. The price has gone from $255 per ounce to more than 10 times that, reaching record highs in the past 25 years. But gold mining hasn't kept up. From 2010 to 2025, budgets for finding new gold have stayed flat or even dropped. So since 2010, only 29 new gold deposits have been discovered worldwide, and none were major finds. So now global gold production is expected to drop by about 17% by 2030. And so that's a big problem. Existing mines are running out of gold and new ones aren't being found fast enough. And this is where Axecap Ventures comes in. The company, trading under the ticker symbol GARLF in the US and AXCP in Canada, was formed to take advantage of this supply shortage. They already control about 5.57 million ounces of gold in proven resources and have another 420,000 ounces in possible resources. And of course, their top project is the Converse project located in Nevada's Battle Mountain Trend, a region that produces about 75% of all US gold. So in March of this year, Axecap started drilling there to move the project forward. And so far looking promising. And so the company insiders are also showing strong confidence. In the early months of this year, they bought 1.5 1.2 million worth of shares, with one co-founder, Mario Vetro, 240,000 shares in just 1 week. Another co-founder, Tyron, bought 50,000 shares. So right now, Axecap trades at about $5 per ounce of gold in the ground. By comparison, similar companies are valued at around $49 per ounce. Plus, the company has $10 million in cash to keep things moving. So that's simple. Drill, develop the project, and unlock more value as the market realizes the potential. Start your research at Cap Ventures today, and you can find out more by clicking the link in the description. Also, feel free to do your own research at the U.S. ticker GARLF on the U.S. Stock Exchange, and of course AXCP in Canada. Once again, remember, this is not financial advice. Mining stocks can be risky and can be very volatile. So as always, do your own research. Just sharing with you some possible opportunities I think worth paying attention to. Back to the program. So let me give it to you straight again. So here on the screen it says, what is this chart? And the statement tells us about the future of dollars. So this is based upon that first chart and this one statement. I put in the ChatGPT. I said, what are some takeaways every investor should consider? The very first thing it says here, it says the dollar is rapidly losing purchasing power. It says gold is priced in dollars. When gold hits record highs, it often reflects a weakening dollar. This surge strongly suggests that investors no longer trust the dollar as a long-term store of value, likely due to rising debt, fiscal instability, and currency debasement through money printing. Implication: fiat currency risk is real. The higher gold goes, the more urgent it becomes to diversify away from dollars. So this here is a large language model taking a statement in the graph and giving an investor some potential implications of what that chart means. Then it goes on to say here, gold is reasserting itself as a safe haven. It says this historically weak close signals that gold is not just a hedge, it's becoming a monetary life raft in a world flooded with debt and geopolitical risk. Central banks and institutional investors are likely behind the push. Central bank and institutional investors are behind the push. It says the implications are retail investors should take notice. This is a global flight to real assets. Number 3, structural shift toward commodities have begun. The chart shows a steep, sustained breakout that began in 2023. This isn't short-term speculation. It reflects a paradigm shift in asset allocation as confidence in sovereign debt and fiat currencies erodes. Hard assets like gold are reclaiming dominance. The implication is long-term portfolios must factor in resource scarcity, inflation, and real asset exposure. This is what a language model was giving me. Like, I didn't give it anything else outside of just inquiring as to what I should do as an investor. And it's giving me 3 things that really will make you rethink a lot of things. And then the last one here, we may be entering into a new monetary era. It says a record gold price challenges the credibility of the current financial system. It suggests that investors anticipate some form of a monetary reset, revaluation, or shift in how currencies are backed or settled globally. Implication: prepare for systemic financial changes, including potential shifts in central bank policy, CBDC rollout, or a new reserve asset framework. And so here, my friends, is what ChatGPT says are the 4 key takeaways that every investor should seriously consider. A systemic event is unfolding. So once again, these are things that I doubt I would see this on Fox or CNN or MSNBC or Fortune or Financial Times or New York Times. It's just stuff you don't see, man. But this is what's really happening. Gold is clearly showing something that I have never witnessed in my life. And assuming if you weren't around during the Great Depression and prior, then you too don't really know what it's like to live in a world where gold is being brought to the forefront. So once again, these are some things I thought worth touching on. I'm just showing and highlighting how more, even though the markets were closed today, it still doesn't matter. Because while we're eating, drinking, sleeping, working, this clock doesn't stop. And as a result of that, even when the markets were closed here, gold and silver and other metals around the world, the markets were open. They were still doing their thing. And it was all against the back of this thing right here. So, yeah, this is what's happening, good people. Yeah, this is an interesting day, interesting time. But, yeah, don't just focus on what you're being told. See what's really happening behind the scenes. Keep your eye on the debt. And, of course, the actual price of the Federal Reserve note when measured against gold. And as I mentioned before, for those that might have come in late or saw this late, is over the last 5 years, this is what we're up against. 48.48% of potential purchasing power has been lost if people held too many of these things or depend upon too many of these things. So there is what I would consider as my humble opinion is that there must be a happy medium or a happy balance based upon having enough to meet your needs, emergency funds, as well as potential speculation opportunities in the future. But other than that, to just base and price your entire future, say 20 years down the line from now, like this is the whole concept of like financial planning. Imagine planning your future in something that's dying. Imagine in Venezuela, if they plan their future on something that died already. That means what they were hoping to receive back is gone. So to think about putting out a number, I need $100,000 or I need $500,000 to retire in 2045. Do you think $500,000 will be of any value to you at that point? If you see all this stuff and understand all this stuff that I just talked about now? No. So it would be probably better to say, if you have the mindset of wanting to retire, I need 200 ounces of gold by 2045 in order to then at that point look to diversify out of that and into whatever the currency might be at that point, so that I can dial back some or retire, whatever words you use. Once again, I don't believe in the word retirement, but yeah, but to each his own. But anyway, measured in weight, not in paper, will go a long way. And more people will find out that either by choice or the hard way, either one. But anyway, good people, this is all I want to talk about. Just give you some thoughts, give you some ideas as to what crossed my mind today, and as well as for those who came in late, present a possible opportunity through Axecap Ventures, a good opportunity for those that do your homework and see if it's something that might line up with you as far as the speculation side of things that I like to talk about. Because at the end of the day, you're going to do three things: save, spend, speculate. And it's up to you to figure out what works best for you and yours. But once again, there's abundance of opportunity out here, so go get it. Take advantage of it, good people. With that being the case, be blessed, be safe. Shalom.